Hey guys, welcome back to another exclusive podcast from IronFX. At IronFX, we're dedicated to bringing you the absolute best trading education to help you take your trading to the next level. In today's podcast, we'll be talking about, how do we identify trends in the Forex market and use them in a trading strategy. All right, so we all know the popular saying, right, that the trend is your friend. All right. So ideally, when we are looking to take trades, right, we take them in the direction of the trend. So if you're looking to buy, right, it'll be good to it'll be good to buy when the trend is showing like a bullish momentum. Okay. So the big question here is like, how do you identify these trends? Right. I like to compare it to like when you are imagine if you're at the beach, right? If you try to swim against the waves, right? If you try to swim against the waves, right, you find most of the time it's very difficult. You paddle forward a bit, right? The waves push you back, right? And it becomes there's a back and forth, right? It's not smooth. However, right, if you are swimming in the direction of the waves, right? So let's just say, the waves is pushing towards the shore, right? And you're swimming in that direction, you notice that it's very smooth, right? In fact, you feel like there's a momentum that's always taking you forward. Even when you're tired and you're slowing down a bit, right? The waves will continue to take you forward, right? So that is what we mean by the trend is your friend and like going in the direction of the trend. So how we identify this, right? We use a couple of things, right? I have three things to share with you guys, right? The first is the use of channels, right? So you can imagine channels, right? When you draw a channel, one key tip, right? Because this is a podcast, I can't draw it out for you. But the one key tip that you should take note of is that when you draw a channel, right? You want to there's the upper bound of the channel and the lower bound of the channel, right? There are two lines that are basically parallel to each other, right? The key rule that you need to take note of here is that there should be two touches at the top of the channel and two touches at the bottom of the channel. All right, minimally, right? You can't have three touches at the top and one touch at the bottom. All right, you can't have one touch at the top and three touch at the bottom. Right, it needs minimally two touch at the top and two touch at the bottom for it to be a valid channel. Right, so if you notice that there's a bullish channel, for example, right, and you're taking a trade in that direction, it really, really helps, right? So you'll be looking to buy when you're in a bullish channel and looking to sell when you're in a bearish channel. The next thing you want to look at is moving averages, right? There are a lot of moving averages out there, but a few moving averages that you can use to really get a gauge on momentum. One is the 100 moving average, right? So you try to look if price is above the 100 moving average, naturally it's bullish. Price is below, it's bearish. All right, but a better thing to use would probably be the golden cross and the death cross, right? So the golden cross is formed by the 50 and 200 moving average. So you can imagine 200 moves rather slow, 50 moves slightly faster, right? So if if the 50 moving average crosses from below to above the 200 moving average, right, that is usually a sign that we call that the golden cross, right? So that means the price will start to be a little bit bullish, right? So that's a bullish sign. Whenever that happens, you can consider that as like, all right, we could be looking at a little bit of a bullish trend over here, right? The opposite is true when the 50 moving average crosses below the 200 moving average, right? That's what we call the death cross, right? So that is where there'll be a bearish momentum, all right? That means you'll be looking to sell instead, right? Golden cross, you're looking to buy. Death cross, you're looking to sell, okay? And the last one is the use of the Ichimoku cloud, right? So everyone knows, not everyone, but rather there is this popular indicator out there. It's called the Ichimoku Kinko Hill, right? If you load it on your chart, right, whether it's on MT4, whether it's on TradingView, right, when you load it on your chart, it usually has a lot of lines, right? What you can do, one neat little trick, is actually to remove all the different lines and just leave the cloud, right, the shaded area on your chart. If price is above the cloud, that is a good indication that it's a bullish momentum. And then you'll be looking to look for long entries or buy entries. And if price is below the cloud, right, that is where it is bearish, right? So be looking for sell entries or short entries, so to speak. right? The best thing, of course, is not to use them individually, but if you can combine them. So for example, you notice that, all right, price is above the Ichimoku cloud. At the same time, wow, it's in a nice bullish channel, right? And just a couple of bars ago, we noticed that there was a golden cross. So these three things are supporting your bullish momentum argument, right? So you're not only counting on one reason, but you see you have a combination of three reasons why the market is bullish. So that helps you increases your chance of getting the momentum right, your assessment of the market's momentum. All right. So if they are conflicting, if, like, for example, you're on a bullish trend, but you're in a bullish channel, but price is below the Ichimoku cloud, then maybe you need to exercise a little bit of caution, right? But when they're all in agreement with each other, that is where they'll perform the best. All right. So these are three very useful ways, right, to identify the trend in the Forex market, and then you can apply it in your trading strategy. All right, guys. Anyway, that's it from me for today's podcast, on how you can identify trends in the Forex market. Do remember to subscribe to our podcast, as here at IronFX, we're dedicated to bring you the very best trading education to take your trading to the next level. Until then, stay safe, trade safe, and peace out, guys.